Well, we are now into 2026, and so the omnibus bill that was passed in 2025 now does have an impact on us and will have a lot of effect over a lot of the decisions that we make. Today, what I want to discuss is a couple main areas of that aspect. One is going to be around how these changes will affect beneficiary payout, how it affects them and kind of their timeline. Also, how there's an impact to you on your Medicare premiums based upon distributions that you take throughout the year. So as we go into this, please keep in mind that I am not a licensed professional advisor, and nor am I a CPA or an attorney. So today's information is for educational purposes only. I'm sharing with you what I have come up with through my research, and I do recommend that you do speak with your licensed professional before you make any type of life-changing decisions. So as I mentioned in a recent video, I did do a subscription to the Bolden software, and through putting my information into that, it gave me some pretty good insights, especially out into the future. And as it got into required minimal distributions and potential tax and how that would affect my heirs and so forth moving forward. So it kind of got me digging a little bit deeper into this subject. So today I just wanted to share a little bit about what I found on a couple of these issues. One, on the beneficiary side, under the Omnibus Act, if I can say that correctly, your beneficiaries have a 10-year rule. They have to draw down those funds. So after you pass away, they inherit your IRA, your 401k, whatever it may be. There's different ways that they can take ownership of those accounts. But there is a 10-year drawdown requirement on that. What this does, in my opinion, it gives you a whole lot clearer perspective on what they may be dealing with whenever you do pass away. So it gives you the ability to plan more now, which will put certain requirements on them as they do inherit this money in order to keep them out of a bad scenario. We'll kind of get into some of that here in just a little bit. But this does give you the reason to get into that deeper and come up with a little bit more of a planned approach to it, because there could be some major effects later. So keep in mind, as your children or your beneficiaries, whoever receives your inheritance or your estate, they're going to receive that estate most likely at the higher earning potential part of their life, which means if your estate's not passed on correctly, or if they don't know how to handle what they've received in the proper way, they could really find themselves with a huge major tax problem or tax bill, if you will, during that time frame. And some of the changes that's in place gives you the ability to plan for that, decide how you want those funds to go out, whether it be into different aspects like a trust, or if you want to do some Roth conversions, etc., to help offset that. So I think through this plan that's now in place through the 2025 Omnibus Act, with the 20-year time or the 10-year timeline, this is a great time to sit down, look at your estate, how it's set up, get with your attorney, get with your CPA, your financial advisor, and look at the estate plan you have in place to make sure that it's still in the best interest of your beneficiaries, how it's currently set up. And the second part I want to jump into is the IRMAA aspect of Medicare. So I'm not an expert in this, but what I understand is it's something I actually was a little bit surprised about. I didn't really know, but that is, in retirement, once you get to the point where you're drawing Medicare, your Medicare premiums can have a surcharge based upon your income. So if your income is extremely high or higher, for example, than certain thresholds, there could be a surcharge that's added to your premium to offset for that. So basically, you're being penalized, once again, being penalized for being successful, being a good saver, working hard in life, trying to get ahead. And Uncle Sam always finds a way to come in there and say, oh, not too quick, let me get my hand full. So with this knowledge in hand, what I've kind of come to the conclusion, like I said, once again, this is going back to my input in Bolden software, which I did actually over the weekend and worked on some yesterday. When I look at my projections in there, it's kind of brought to light to me that I do need to really sit down and get with my financial advisor and look at potentially doing Roth conversions. I know through the 2025 Tax Act or the omnibus bill that was passed, there are some stabilization on some of the tax rates. The tax rates didn't expire. They're not going to go way up like they had projected. But there are going to be some adjustments, over time due to inflation, that kind of thing. But still, that being said, if I get into the latter part of my retirement and I've not made certain planning, for example, doing Roth conversions, I can end up in a situation where I have very high required minimum distributions, which are RMDs, and that's how I refer to it moving forward. And if I'm forced into those RMDs, I'm going to pay, first of all, a lot higher tax, not just tax rate, but a lot higher amount of taxes than I would if I had converted it into a Roth, which would have made it tax-free. And since it's not tax-free, if I don't convert it, then that income, which would be those RMDs that's coming out of there, will then affect my taxable income, which will then most likely push me above, under today's terms, the what's referred to as IRMAA, which is the Medicare surcharge. It's going to trigger those surcharges for me, so it's going to cost me more in premium and way more tax. So, long story short, I am going to continue working, getting everything input into Bold and get a finalized look on how that looks, and then get with the proper professionals to come up with a game plan to how to offset that moving forward. So I just wanted to bring that up today to kind of, I guess, put it back in the forefront for you guys as well, to look at that, consider, how that would affect you moving forward, and get with your proper professionals and have those discussions as well. Some of the solutions, going back to the beneficiary aspect of this, like I said, I'm not giving legal advice. I'm not giving financial advice, anything. I'm just sharing with you some of the research that I have looked into. But, some of the potential solutions especially back to the beneficiary issue is, if I do some Roth conversions, from what I can tell, that would be beneficial for the beneficiaries also, because they would be inheriting those dollars tax-free. And so by doing them tax-free, it wouldn't have an impact on their income at that time, which could throw them into a little bit of a state of havoc. Some other things to look at that I'm considering would be, how would certain legacy documents, like a trust, for example, if I put together a trust, had the beneficiaries of the 401k and my IRAs, etc., the beneficiary being the trust, then how does that affect the beneficiaries of the trust, which would be my heirs now, moving forward? And does that give them more time to plan when that time comes? And does it also lessen the decision fatigue they may have, and then also other things like the tax impacts? So I'm going to be looking into that. I kind of recommend that you get with your professionals as well and check into that. If you get the financial software, whether it be Bolden or some other, and you input your information in there, or if you get with your financial planner and they input that in, it really helps a lot, because you can see these potential trends to help see if this could be of a concern to you and your estate. So that is definitely one way to look at the beneficiary challenge. Another thing is to, when you consider doing Roth conversions, you can consider doing what's called a Roth bridge. And the Roth bridge basically allows you to move money from your traditional IRA to a Roth IRA, pay the taxes at today's rates, and then your heirs later get to withdraw the money tax-free. They'll still have the 10-year withdrawal requirement under the Secure Act, but it'll be tax-free. So it won't have the tax impacts on them, which will allow them to avoid large tax bills. But when you do that conversion bridge, it also gives you the opportunity to have dollars that you can access that would have different tax implications based upon what the tax rates might have been at the year that you did the conversion. So that's some other things I'm looking into. I'll be getting with my professionals to discuss. Another thing that I've kind of ran into that I really wasn't aware of, and that's what's called multi-generational giving. And that is being able to do an annual gift to your, for example, your children, and it would fall under your annual gift tax exclusion. You would still have, of course, the tax aspect because you're withdrawing it and you're giving it. But it would be a way to transfer funds to them under a more controlled, manageable, predictable expectation, to where you can look at it and say, okay, this is what we think the taxes may be on this distribution payout, and you can plan for it accordingly. I also understand that you might be able to take funds and roll them out of your retirement account, roll it into a retirement account they've got. They get it tax deferred. Of course, you'd have a tax liability on it, but it's a way of transferring some of those funds to them now while the tax rates are a little bit lower. But you'd have to definitely look at your income for the year, look at your situation, and make sure that you're not putting yourself in a big tax challenged issue. So these are just a couple things that I've ran across. I mean, I'll continue to share stuff with you guys as I run across other things. But like I said, I put the information into Bolden. It spit out me some things to consider, and so I just wanted to share, today a couple things that I'm looking into that have come into play going into 2026. So hopefully you found the video a little bit of value. If you did, hey, I appreciate it. Thanks for watching. If you would, please subscribe to my channel. Give the video a like so I can push the content out to more people. And I welcome any kind of feedback and input you have. Please drop those comments down below. I'm Mike, and I'll see you in the next video.